much for being here.
Thank you for
It's
having me.
always good to see you. So I want to kind of start by just talking about the partnership that we have now. So,
Absolutely.
Cloud9 Conception is now partnered with Egg Fund, and of course, I'm going to let you do an intro on what Egg Fund is. But on our end, we wanted to provide a financing option for clients, intended parents who are coming to us in need of egg donor resources, and having some sticker shock with the cost that is associated with IVF, period, but also and especially with third party reproduction. So we are now a partner of Egg Fund. They will be who we refer you to if you're looking for financing options, mainly including loans. So I'm going to let you introduce yourself and thank you so much for being here.
Well, thank you so much, Shelby. We're so thrilled to be partnering with you and Cloud9 Conception to help more people move forward in their family building or hopefully be able to. What we do is we provide financing options for people who need help with paying for out-of-pocket costs. I started, just a really quick overview, I started Egg Fund. We're the first and largest fertility financing platform. We started with one lender, and now we have 25 national lenders on the platform. I started it because I went through the process myself. My husband and I, we met late, like many professionals. You know, we had worked most of our most fertile years away, so to speak, and we ended up having some trouble staying pregnant. We got pregnant, but couldn't stay pregnant, and we had several miscarriages. And after the third, we realized we likely needed help, and we went. And at the time, this was previous to what we have now, is many more opportunities for people to have jobs with fertility benefits covered.
Right. Mm-hmm.
And that is a very recent phenomenon. I would say in the last 5 to 8 years, it's really become a thing. But this was prior to that. So we had to pay for everything out of pocket. And we were working professionals. We just bought our first home together. And then we get this other huge bill. We ended up paying $80,000 of our own money trying to get pregnant. And, you know, it unfortunately, we had to end our journey early. And that's because, in part, because we couldn't afford to keep moving forward paying out of pocket. So my story ends up with a great ending. I end up starting Egg Fund to help other people like me going through this situation have a better set of options than I did, you know, and have a better outcome. So I started Egg Fund, and soon after I found out I was pregnant spontaneously. And
Woo!
I have a beautiful daughter. She's going to be 8 at the end of June. Her name is Elizabeth, and she's healthy and happy and just amazing. And I feel like she and Egg Fund are sort of twins.
Yeah, they're
Because
both your babies.
they're both my babies,
Mm-hmm.
and they both came out at roughly the same time. So Egg Fund, you know, is really that's in our DNA, is to kind of help to reduce the stress where we can, and that is through providing options by being as flexible as we can be for people, having the largest loan amounts, which is more realistic, especially when we're talking about surrogacy. There are a lot of lenders in the fertility space that will only go to $50,000, and that isn't realistic for this type of journey. So what we do is when you come to us, it's one application and then you're matched. Think of us as like a dating service for your fertility loan. You know, you get put in one little application, takes just a few minutes, and just sit there, because like within 30 seconds, you'll know if you're pre-approved. You'll know all the information you're going to need to know: what the interest rate is, or the APR, what the term is, how much you're pre-approved for, what your estimated monthly payment would be, who is the lender. All that information, you'll have that right at your fingertips so that you can make a good decision about whether to move forward or not. And ideally with Egg Fund, because we have multiple lenders, the ideal is that you get choice.
Right,
You
right.
get more than one offer, and you're able to make a choice for what's better for you. The other thing that we did to make it better is to expand the type of credit that we service. You know, we go as low as 600 credit score. That is just keeping realistic with what life is like today. And the other thing, you know, relating to what modern life is like in modern families is we make it easy for people other than the person undergoing the journey or the treatment to actually apply for the funds. Perhaps the person undergoing the treatment or the journey isn't the best credit profile. Maybe their partner is. Yeah. Maybe their parent is. Yep. Maybe a close friend is. We keep those very open for people.
I think that's great.
Be like that. When we first came on, you needed to be on the application if you were undergoing the treatment. It was a lot more. You had to have Prime Plus credit. You know, it was very restrictive, and you had to go to the clinics and use the providers that the lender indicated to you. We broke all of that apart, and we disrupted all of that. You could go wherever you want with Egg Fund. It makes it really flexible. It's like reducing the stress and reducing the red tape.
Yeah, no, I think that's great. And also first of all, the idea that someone can apply for that benefit without actually having to be the person undergoing the procedures and the treatment is great. One thing we do see is that sure, there are more companies that are moving forward with fertility insurance benefits, which is great. We always love that. But that can be very restrictive. If you're not a married couple, there's a chance that you might be sitting on benefits, one partner or the other, that you can't use. If you're a same-sex couple, sometimes there are parameters that you have to meet to get those benefits. For example, trying naturally, which is not going to happen if you're a same-sex couple. So there's a lot of, we love to see the insurance coming forward, but there's a lot of caveats to using those benefits. So knowing that there's an option where you can get access to funds that you might otherwise not be able to get your hands on is great. And knowing that it can be someone who's not the person going through treatment.
And the other thing about insurance that you bring up, which is very important that people are not aware of, is that not only are there limitations for actually accessing the benefits, but there are huge co-deductibles or co-insurances often associated with these benefits that can amount to thousands of dollars. People come here for Egg Fund loans to cover gaps in insurance or co-deductibles, because those can be $5,000, $6,000, $7,000, and that's a pretty sizable amount, you know, depending on the situation. So we're able to, you can utilize us for that too.
Yeah, and there's also, just kind of circling back to that, there are also quite a few benefits that it's a repayment to you. So you submit your receipts or you show that you've made these payments, and then you receive the funds from insurance. So again, you might still be in a position where you have to have that cash up front just to use your own insurance benefits. So yeah, no, it's great. And then just to kind of cover the bases as well, it is a soft credit pull initially, correct? So
Exactly.
To see your choices, okay.
Exactly. So you're not hurting your credit to do this. So the idea is it's one place, one shop, one stop, and you're not hurting your credit to check to see what your pre-approved offers are. And there is no obligation to move forward either. So if you do get offers, but you don't like what you see, or you want to have some more time to think about it or to even shop around, you're under no obligation to move forward. You could go ahead and just keep shopping around if that's what you want to do. We never force anybody.
The information that someone might come to you with to see whether or not they're pre-approved for something, what does that typically entail? What should someone be prepared to bring with them to your website to see whether or not they would be eligible for a loan?
Really good question. These are the things that every lender will ask anyone who applies for a loan. Your credit score. Do you know what that is? Have you looked at it lately? Looking at it last year does not count.
Right.
Look at it today. Things change all of the time. And it's real that we offer a lot of this guidance online through our free guide, which you can download, called How to Pay for It. But basically, there are aside from your bank, which oftentimes larger banks are giving away this information for free to their as a service to their depositors, that you could access your credit score. There are places like Credit Karma online that you can
Yes.
track your credit score. So there's lots of places, and more than ever before. Another thing that people don't know is that by law, all three credit bureaus need to give you your credit report for free once per year.
Yeah.
For free. So this is just good maintenance. It's like wellness, financial wellness for you to just keep on top of that. So you should know your credit score. You should know your credit profile. You should be checking it if you can on a regular basis to make sure there are not mistakes on your report that are hurting your credit score and hurting your credit. The other thing that you should know is what you made last year.
Yeah.
You should know all of that income stuff. What's your overhead? What is your monthly overhead? People want to know what your rent, mortgages, auto loans, any like recurring overhead every month that you have to pay. They're going to ask you information about that. Obviously, what you make. They may ask information on your education. Your social security number. And with Egg Fund, since the applicant is actually paid, and not the clinic, not the agency, they will ask for a bank account. So you're going to need to know your bank account routing number, ACH information, your bank account number, obviously, so that what happens is it's a very automated system. If you go through, you get a pre-approved offer, you approve the pre-approved offer, and you go through with the lender and complete the process, they're going to then ask for permission to do a full credit check. And if that full credit check checks out, when that happens, they automatically put the funds in the bank account you've provided. There's no calling, oh, hey, your money's ready. There's no check in the mail. It goes right into the account that you've provided. So you're going to need to know your bank account information so that they can wire you the funds. So those are the types of information that are typically, and obviously, how much do you need? And it's more of an open-ended question than you would expect from the outside, but it is more open-ended. And the thing I say about that with these type of loans, not just egg fund loans, but most fertility loans can be prepaid in advance with no penalty.
Right, right.
So if you're not sure, if you have an extra 5,000 or 10,000 left over, you can prepay that, so you're not paying back interest on that money that you didn't need. Prepay it back to the lender with no penalty. Okay,
Yeah.
so that at least reduces some of the stress about the not knowing the final tab, the tab, so to speak, for the process.
Right. And I think most people who are going through fertility, you learn very quickly that you can never be prepared enough. So the sheet that you're getting that shows a quote for your fertility clinic, that is usually not a start and end to what you can expect to pay when you're going through fertility treatments. There's a lot of third parties involved. There's pharmacies. If you're going through an agency, there's possibly an egg donor, possibly a surrogate, paying for, if you have someone who's using a satellite clinic and not going to the same fertility clinic every time for scans or blood work, all of those bills come from different places. So the great thing about Egg Fund, that we love about Egg Fund, is that it gives you the power to distribute those funds as you need to. And you're not dealing with these huge delays in trying to get prior authorizations or make sure that the money is getting where it needs to go. So I do think that is one of the great things, and the no prepayment penalty is awesome, because if you have the chance to borrow more than you might think you need, you'd be surprised with what you might end up actually requiring if things don't go the exact way that you want them to the first try, which, let's be realistic, that doesn't usually happen.
So yeah, absolutely. I think it's imperative to be as flexible as we can as service providers in this process. And the lucky thing is we were able to.
Yeah, I think it's great. And then also, I always like to bring this up when I have anybody on the webinar, but the majority of us come from some kind of background in fertility. You shared your story a little bit, but I also am a 2-time prior egg donor, and I've worked in the field for a while. So it's always nice to know that you're going to lender agency who's been through a similar experience as you
Yes.
have. I know that you can speak more than a typical banker would on what kind of cost the expectations can be or what someone can expect when it comes to
Right.
cost, pardon me.
Right.
So I think that's great, and reminding people like, hey, what you're looking at might not cover the cost of things like PGT. It's not going to cost your it's not going to cover your medication costs.
That's
So
right.
having someone who's been through it and can truly help guide the clients through what they can come to expect with a loan is awesome. And then you have a very special type of loan, right? The Kinder loan.
That's right. And
Okay, do you
so
want to tell us about that?
absolutely,
Yeah.
absolutely. So like we have always been looking for cost-effective solutions for this. We know rates have been going up the last couple of years, and that really concerns us because it makes it two things. Number one, it costs people more money to borrow money, and that's not great because we're
Right.
trying to keep costs down. The other thing is when rates go up, it also makes it harder for people to just get approved because it's kind of it's what's happening is there's just less money around to lend. People are getting more conservative. So what we came up with is we partnered with a company called Greenline, and what we do together with them is to offer the first ever home equity line of credit that is made for fertility. So you could use the equity in your home to pay for any family building expense. Why is this a good thing? Well, because home equity lines of credit tend to have significantly lower interest rates
Yes.
than personal loans, which is what a fertility loan is. And we could be talking about saving you hundreds of dollars a month in payments if you're eligible. The other thing that is greatly beneficial about the Kinder loan, and that's what we call it, the Kinder loan, is that you can extend your payments further out in time than a normal personal loan. They can go out as far as 20 years.
Yeah.
Most personal loans are like pretty much done inside of 7 years. I'm seeing most of them between 3 and 5 years. So by increasing the term, you lower your monthly payments. And because the interest rates are lower to begin with, it keeps it more reasonable. Now, there are limitations. It's harder to be approved for this because, again, you're putting your home equity up at risk when you do this. And you need to have a certain amount of equity in your home to be able to even get a home equity loan. But all this is predetermined and it's all calculated for you without you having to rack your brain for it on EggFund. When you go and you start the process, you'll be automatically like pre-qualified. If you don't qualify for whatever reason, this isn't offered. Our lender doesn't do it in every state in the country. So, gesundheit.
Yeah. Good Lord.
So, you may or you may not be eligible for the loan. So it's automatically calculated for you. So that's just another option. We're always looking to find ways to bring down borrowing costs for people who are going through this process.
And in regards to the home equity, so is this a loan where you get a lump sum? Is this a line of credit? What can people expect if they were to become eligible for that?
Absolutely. So you need to take as a minimum of $35,000 out at one time.
Okay.
And so it could be utilized as a line, which is very helpful in something like surrogacy, because if you need to go through some other hoops as you go along the way, and then you need another 20,000 here, another 30,000 here, you can tap the line of credit.
Okay.
But if you need a bunch of it up front, you could also do that. You
Okay.
get
Awesome.
So you get the line, and the line can be tapped over time, or the line can be tapped up front. But there is a minimum of $35,000 that you need to take out in order for you to be eligible for that type of line product.
And
So it works really well in your scenario with surrogacy.
yeah, and it might vary a little bit as well, but do you know about how long someone has access to the funds that are available to borrow before the payments lock in and they're, no longer able to pull?
Yes, I believe it's 18 months.
Okay. Okay, yeah. So, I mean, that's a great amount of time to work with things and see where everything's falling. Usually when someone's utilizing an egg donor, once they select that donor, it typically takes about 3 to 5 months to get to the point where they're actually having the retrieval procedure. So
Yes.
then that still leaves a solid year
Yes.
for you to kind of look at things and see how much you might need and whether or not you're going to need to pull more than you were originally expecting. So yeah, that's awesome. Cool.
Yeah, so we thought that was helpful. So that's just added to the mix.
Yeah. And how long have you guys, how long has Egg Fund, it's 8 years, I guess, since it's twins with your
Yeah,
daughter, Elizabeth.
yes. So we launched with our first lender at the end of 2018,
Okay.
November of 2018. And then we, from there, ramped up very quickly to do a multi-platform because we found out being one lender, with one lender, as great as they couldn't service the full gamut of credit
Right.
that of people that came to us. So we realized very quickly that we needed to have multiple options to
Right.
really fully be able to meet the demand of the people that are coming to Egg Fund for financing.
Yeah, I think that's great. And if there are people that are coming to you to look into whether or not they would be eligible or qualify for a loan, is there a certain expectation that we should set them up with when they come to your door? Is it likely that if they do have a score over 600 that they will see a couple of options, or is that something where, well, they'll probably maybe get one? What can we expect with that?
It's really hard to say because the lenders don't only look at the credit score.
Right.
There's something they're looking at called the debt to income ratio, which is a very important data point. And that debt to income ratio, if it's not within 40% or lower, even if you have a relatively high credit score, if your debt to income ratio is high, you
Yeah.
may not see an offer.
Right, right.
It's very tricky these days. So that is why it's best, what I tell people is, look, come and try and see. It
Right.
takes a few minutes of your time. That's basically all you're losing. If it doesn't work for you, maybe then your partner tries. And let that person take a few minutes and see what you get. It's created to look and try and see so you get some answers and you could decide from there what you want to do.
Great. And then if a couple is coming to you, can they apply for a singular loan together?
Used to, yes.
Okay.
In the last year to 2 years, the lending criteria has gotten tighter. As I was mentioning, lending has gotten tighter. And as part of that tightening, they've made the requirements harsher. And
Okay.
so they want one person on the loan application to be able. Whereas we had always had joint applications that been part and parcel of like what we did here for like 6 years before that changed with the lenders.
Yeah.
And that is in part a function of the larger market, because
Right,
they
right.
too, they're reacting to the market. So if it gets tighter for them, they're going to start tightening. And kind of it trickles down from there. Thank the Fed on that.
Yep. No, that makes complete sense. And then what you were saying about the debt to income ratio, I think a lot of people don't realize that might be just as, if not more important than the credit score. So,
And
if
the other
that-
thing, I'm sorry to interrupt. The
No,
other
no,
thing
please
to
do.
note in that is the debt to income ratio that the lender might be looking at might incorporate the amount that you're borrowing. So they
Oh,
might
wow,
look
okay.
at the lending, So they might take the amount that you're asking for and include that as if it had already happened and still want that number to be under 40%.
Right.
Not all of them, but some of them, because again, we service a wide array of credit on
Yeah,
Egg Fund.
yeah.
But I'm just giving you an example of how it could get very quickly restrictive. Even when somebody says, I have a 760 credit score, why am I having trouble getting approved? Well, they have loans all over the place. They have a home loan, they have an auto loan, and they still have a student loan
Yeah.
that they're
Which,
paying every month.
I mean, the debt to income ratio is important. They're trying to see whether or not you
Can pay it back.
even afford to,
Yeah.
right, to pay it back. So yes, very important. And then when someone applies, so for example, if I went on and I was applying for an egg fund, you know,
Loan.
loan, um, what would it go off of my household income or would it go off of my individual income?
Very good question. Well, when we had joint applications, it would be household, like whatever
Right.
you were filing with together.
Okay.
And these days, I would say I would be more conservative and I would say it would go off the individual's, like W-2 or whatever their income is that they're reporting for themselves.
Okay. Which is another great benefit to the fact that someone can apply and take out a loan even if they're not the one in treatment. So keep that in mind. If you're going through treatment and you're the stay-at-home mom or stay-at-home dad and you're looking to expand your family, you don't have to be the one who applies for that loan.
Absolutely.
So, okay, awesome. Well, that's great.
Absolutely.
What, anything else?
Well, the other thing, talking about people who can apply for you, what often we've seen happen here is that parents will do it for
Yeah.
their child.
Oh, yeah.
Because if you think about it, they may have a 30, 40-year credit history. That's a positive one. So they have a strong credit profile. They will have a better opportunity to have also a better offers, lower rates offered to them, better situations offered to them. And with Egg Fund, it's completely possible that that can happen. And we've seen it happen more than once here, where
And
grandparents will do it.
correct me if this is not accurate, but it seems that if you can apply and get a loan and help someone else who's going through treatment, right, and the parents are opting to do this, they're more likely to also have a home that they've owned for a longer period of time.
That's right.
So
That's right.
the
That's
home
what I'm
equity
saying.
opportunity might be way different than if you were trying to go through on your own.
Exactly.
So yeah, that's awesome. That's
They're more financially secure. They've had decades on you to
right,
get that security.
right.
You know, they have, so why not be able to tap into that? And parents want to have grandchildren,
Yes.
and they're happy to do it,
Yes,
you know?
absolutely. No, that's great. I think that that's awesome. And again, I feel like I can't say it enough, but the non-prepayment penalty, or I might be
Huge.
saying that wrong, but the
Yes. No prepayment
concept-
penalty is
yeah,
how
the
it's.
no, not non,
Yes.
the no prepayment. Yeah, that makes a huge difference for a lot of
Yes.
people, because you're sitting down, you might get overwhelmed thinking, oh my gosh, I'm going to take this loan out and pay on it even after my kids have left the house. I'm going to be paying on
Right.
this loan. But with the no prepayment penalty, it just opens up the doors for you to not have to worry about that.
Exactly.
If your financial situation does change.
You know, or you get a windfall, let's say you get a tax return funds.
Yes.
You know, you can take that, you know, these bulk cash payouts that you get, a bonus, job changing bonus, whatever, Christmas bonus, you could take these lump payments that you get over time for different things and use that to pay down your loan even as you do it, to
Yeah.
reduce your interest costs.
Right. I don't want to sound conspiratorial, but the system is kind of set up for people to come into this and not be extremely fluent in financial talk. So having someone who, like you, who can guide people through these questions before they sign the fine print documents is great.
Yeah.
And it feels like you have someone in your corner who can empathize with you and understands what you're going through and knows how much it means to you and isn't judging you for
Right.
taking out an amount of money to try to build a family.
Right.
Because, you know, it is a weird time where some people are like, well, why would you do that? Or why not adopt? Or why go this way? So being able to come to you where you can say, look, I've been through this. I understand the desire. And this is a judgment-free zone. And let me explain some of these terms to you that you might not be familiar with. All of these things are a great reason and such a good motivator for us to partner with you. We're so happy that we're able to provide that resource. You are the resource, okay?
I really appreciate it. We really are mission driven in what we do. We do it because we want to help more people be able to realize their families. We really believe that it's a human right. If this is what you want to do, if you want to build your family, that what balance your bank account is shouldn't be the primary decider whether you get to realize that dream. I feel
Right.
like it's a human right. It's un-American to have that be the deciding factor. And
Yeah.
I feel like we really believe in that here. And everything that we do, talking to people, it is judgment free because we've been through it.
Right.
And so we know what you're going through, and we do not judge. We are just here to help.
Thank you so much for everything that you do, because we are all coming from these different backgrounds and trying to make a functional field of reproductive medicine is actually accessible.
Yes.
And we see the strides that are taking place, but sometimes it feels like every time we pass over a hurdle to make it more accessible, things get a little bit more difficult, right? Or things get a little bit more expensive, or it becomes to look a little bit harder to even finance having a child at all. So I definitely appreciate what you do.
Thank you for appreciating what we do and for noticing it and for caring enough about the people that the would-be parents you're working with, the aspiring parents you're working with, to put them in the hands of people who are really going to have that caring touch. I do believe that matters in outcomes at the end of the day.